First up, the big story that we're tracking at this hour. In a massive setback for China's real estate sector, Evergrande Group, known as the world's most indebted developer, has been ordered to liquidate by a Hong Kong court after an 18-month-long hearing. The Chinese property giant faced a crushing burden of over $300 billion in liabilities, leading to its default on debts in 2021. The crisis in the real estate sector and its impact on capital markets could further complicate Beijing's efforts to revive the economy and may lead to increased calls for additional stimulus measures in future. Remember, Evergrande had been working on a $23 billion debt revamp plan with bondholders, which fell apart in September of 2023. Here's more in this report.
Chinese property giant Evergrande has been told to liquidate in a move set to send ripples through financial markets. A Hong Kong court gave the order Monday morning. It comes after the world's most indebted developer was crushed by more than $300 billion in liabilities. The firm defaulted on its debts back in 2021, throwing the country's whole property market into turmoil. Now the liquidation order is likely to deepen the crisis in the sector and jolt China's fragile capital markets. Beijing was already grappling with an underperforming economy and stocks wallowing near 5-year lows. Now any new hit to markets could undermine revival efforts and ramp up demands for more stimulus measures. Evergrande had been working on a $23 billion debt revamp plan with bondholders, but those efforts were scuppered last September when billionaire founder Hui Kai-yan was put under investigation for suspected crimes. A liquidation petition was first filed back in June 2022, but the proceedings were adjourned multiple times as Evergrande scrambled for a survival plan. At least 3 other developers have already been ordered to liquidate by Hong Kong courts.
And Evergrande's crisis could bring down the economy and the revival and the hopes of revival for China in near term. My colleague Karthik Malhotra here with me in the studio. Karthik, hi. It is as big as it gets for China, one of the biggest, most indebted property developers in the world, not coming back anytime soon if the Hong Kong order is to go by. What does it really mean for Chinese property market first and then the Chinese economy?
So Shweta, I think 2 very critical aspects to consider here. Number one, since this is a Hong Kong court's order on liquidation of Evergrande's assets in Hong Kong, and Hong Kong is just 10% of the total market that Evergrande controls when it comes to its own projects. 90% of Evergrande's business is actually in mainland China. So what is left to be seen right now is that is the Chinese government in Beijing really going to adhere to the ruling of the Hong Kong court's order, and is this order going to be applicable in China as well? That is something that is yet to be known. Now let's consider both the scenarios. If this order were to be ignored by the Chinese government, then we are talking about liquidation of just about 10% of Evergrande's assets which are in Hong Kong, which will fetch it a market price because Hong Kong, unlike China, is still a better doing economy right now. Now, specifically in China right now, the issue is that if the liquidation were to go through in China, then this is a very, very large conglomerate. In fact, it had $300 billion in debt in 2021. And almost 2 years on, there has been absolutely no restructuring plan by the management of Evergrande to be able to pay back its debt. Now, this debt is not only from within China, this is from outside China as well. So, if China were to go ahead and liquidate Evergrande, who's going to buy it? That is question number one. It's not that the economy is doing great and the real estate sector is booming. In fact, quite the opposite. So if the real estate sector is not doing well, if there isn't enough demand for housing, for real estate within the country, which remember had been one of its biggest drivers, taking it to those 8%, 9% growth levels pre-pandemic. But post-pandemic, we haven't seen, during and post-pandemic, we've seen consumption in China dip. So if the liquidation option were to be exercised in China, who's going to buy Evergrande's assets and at what cost? And even if there was to be a suitor who goes ahead and executes this distress sale, which becomes an opportunity purchase for the buyer, then what is that buyer going to do with these hundreds and thousands of flats and housing inventory which has been lying vacant.
Absolutely.
So who would want to get into China's real estate property market right now when the bubble has actually burst about 2 years back? And if you enter, you are lumped with an inventory that Evergrande has been lumped with no takers.
Absolutely. So nobody is willing to buy, hoping to buy. What does it really mean for China, Karthik? Because on the back of the fact that China has been introducing stimulus on stimulus, the growth is not picking up just as yet. It's not quite in line with what was expected as of this year in 2024. The last quarter of
I mean, see, Shweta, the big stimulus package of $280 billion is still pending. So we don't know the timelines. We don't know what the focus of that stimulus package is going to be. Is that package going to be focused only on real estate? Is that going to be focused on automobiles? Because these have been the two biggest drivers of the Chinese economy. And if the stimulus package is directed as these two sectors by way of reduction in taxes, softer loans to buyers, etc., it should result in some sort of a fillip for the Chinese economy, especially on the consumption side. But the point is, where is China also going to get that $280 billion right now to, and if it is going to pick up that money from its own reserves, then that money can be better deployed in getting the factories of China running again, in getting people employed again. So would you rather not employ people, because unemployment rates in China are hovering in the range of about 20%. So should the job of the stimulus, stimulus for any economy is bad. It is this injection, it's a band-aid approach, it is going to solve the symptoms. It's not really going to cure the problems.
Absolutely.
So if you give that stimulus, would that stimulus be focused towards industry to really be able to get people back in job and consumption to pick up organically? Or should it be focused directly to people and give money in the hands of people and get them to go and buy? So the former should be the approach of any mature economy, and I think China has been one, even though there are problems of late. But overall, Evergrande, I think, is just the tip of the iceberg. You could see a country garden fall. You could see other real estate giants in China slowly come to a standstill and eventually collapse. So that is the larger real estate agony in China which is brewing right now, and Evergrande is just the first of the chips to fall, if it really does fall in mainland China, which again is question mark right now.
All right, the story is currently still developing. We'll keep getting you all the more details. What we do know for sure is that a Hong Kong court has now ordered liquidation of Evergrande, which, by the way, the territory, Hong Kong holds only 10% of Evergrande, 90% is still operational in China. Whether that will also go into liquidation, we don't know, but the court order has finally come through in Hong Kong court, where the legal counsel, of course, argued for Evergrande to be remained operational, and the overall understanding was enough is enough when it comes to Evergrande's and the extensions, the 7 extensions it has been given in the past.